Hello everyone, welcome to the Ved Indicator. In today's session, we are going to learn how to trade using the Ved Indicator. Before learning how to trade using the Ved Indicator, let us understand some of the signs and notations used into the Ved Indicator. Here, the green arrow represents the demand in the Ved Indicator. The yellow arrow represents the supply in the Ved Indicator. The green line represents the support to the market, and the yellow line represents the resistance to the market. So I think you guys are now clear with some of the signs and notations which are being used. So now coming to the point, how does the candles look when an arrow is being marked? Exactly, when a green arrow is being marked below the candle represents the demand candle. Remember the point, a green arrow is always being marked below the candle. And coming to the yellow arrow, a yellow arrow is being marked always above the candle, and the candle above which the yellow arrow is being marked is known as the supply candle. Now, how exactly these candles look when an arrow is being marked into the chart? So, as you can see here, a green arrow is being marked below this candle, which represents a demand candle. Some another examples for the demand candles are, as you can see here, and another arrow is being marked below this candle. Even this is the demand candle. Even these candles are our demand candle. Now, coming to the supply candle, a yellow arrow is being marked above the candle, which is known as the supply candle. Again, a yellow arrow is being marked above this candle, making it as a supply candle. Now, coming to the next point of the Ved indicator. As you can see, there are many different demands and many different supplies being marked on the chart. Now, here comes the question, which demand acts as a good demand to the market and which supply acts as a good supply to the market? So let us understand how to mark a good demand and good supply. Before marking a good demand or a good supply, let me make your point clear. The candlestick pattern used over here is simple candlestick pattern, neither Heikin-Ashi nor any other candlestick patterns. As you can see over here, there are many different demands which are being marked. Among these demand, which is the good demand? Let us figure it out. So the basic condition for a demand to be a good demand are as follows. When a demand is formed, the demand to be marked as a good demand, it has to break the previous resistance. As you can see, a demand A is formed over here, which is breaking the previous resistance. The resistance is being broke over here. Now, coming to the demand B, after the formation of demand B, it has neither broke any of the previous resistance. Same as the case with the demand C. Neither this has broken any of the previous resistances. Now same case with the D, neither this D demand candle has broke any of the previous resistances. So by seeing this, we can figure it out that demand A has broke the previous resistance and demand B, C and D did not broke any of the previous resistance. So we are gonna mark demand A as a good demand. So as you can see into the picture, the demand A is being marked as a good demand and a zone has been marked for further. Now, as we have seen how to mark a good demand, let us see how to mark a good supply. As you can see over here, there are four different supplies marked into the chart: supply A, supply B, supply C, and supply D. Now, here comes the point: which supply is the good supply? Now, a supply to be a good supply has to break the previous support. Now, as you can see, after a supply A formation, it has broke the previous support. Now, after the formation of supply B, it has neither broke any of the previous supports. And same picture with the supply C. After the formation of supply C, it has neither broke any of the previous supports. And the same picture with the supply D. So we can conclude that supply A has broken the previous supports, which is the green line, and supply B, C, and D did not broke any of the previous supports. So hence we can say that supply A is a good supply and marking the zone of supply A. As of now, you have seen how to mark a good demand, a good supply. Now let us see how to take a trade, how to mark the stop loss, how to book the target, and where to take a trade. Now, as you have seen, there is a supply candle being formed over here. Now, this supply to become a good supply has to break any of the previous supports. Now, as you can see, the supply has broken the previous support with the help of this candle. So, you can say this as a good supply. So, marking the zone of this supply candle. Now, as you can see, the supply candle zone has been marked. Yes, now comes the picture. What's your stop loss where you have to enter into the trade? What's your target to be booked? Okay, so first starting with the stop loss point. The high of the candle just some points above the high of your candle will be your stop loss. Now coming to the target point. There are two different scenarios where you have to observe your target. The first scenario is book a minimum profit of 1:2 ratio. Your minimum profit ratio should be 1:2. And the second different scenario is you have to look after the nearest support or the demand. Whichever is nearer will be your second target. So in this case, my support is nearer to the trade, so I will be booking my second target over here. So this was for the sell side trade. Now let us take an example of a buy side trade. Now as you can see the chart, there is a demand formed here. So demand is being marked. Now the demand to become a good demand candle has to break the previous resistance. Now as you can see, the previous resistance has been broken here. So marking this as a good demand candle and marking the demand zone. As you can see, a demand zone has been marked of the demand candle. Now here comes the picture where should be our stop loss. Just below the low of your demand candle will be your stop loss. Just some points below the low of your demand candle will be your stop loss. Where should be our entry and where should be our target? So exactly as this candle has retested our demand zone will be the point where we'll be taking our trade for the buy side. And same over here. Here comes the two scenarios again. First, we recommend everyone to book a profit ratio of 1:2. And again, the next supply candle or the next nearest resistance will be your second target. Exactly, my next nearest resistance is this, so this will be my second target. So I will be taking an exit for the trade here because it has reached my second target. So this was the case for the buy side trade. Now let us take a live example in the today's Nifty's chart. As you can see, there is a demand candle formed in the chart. So for this demand candle to be a good demand candle, it has to break the previous resistance. Now, as you can see, the previous resistance has been broken. So marking this demand candle as a good demand candle and marking the demand zone of this candle. Yes. So my stop loss will be just some points below the low of the demand candle, and my entry will be taken when there will be a retesting for the demand zone. So as you can see over here, this candle has retested my demand zone, so I will be taking an entry for the buy side of with this candle. Now comes the target. Exactly as we have discussed, our first target will be 1:2, and my second target will be the previous resistance or the previous supply after entering the trade. So as you can see, the previous nearest resistance is this. So my second target will be booked over here. My first target was 1:2 and my second target is the previous resistance or the previous supply. So as you can see, my previous resistance lies over here. So my second target will be booked with this candle. So I will be taking a complete exit to my trade at this candle. This was the case for the safe traders. Now, if you are an aggressive trader, you can take a entry for the trade after the formation of the demand or supply. Here comes the same point. Your stop loss will be same, just below the demand or just above the supply candle. And here you can take an entry for a quick scalping. Just book some points and take an exit from the trade. If you are the safe trader, we better recommend that wait for the retesting of the good demand zone or the good supply zone so that you can book the profit according to the steps we have recommended to you. There's a note point which has to be taken into the picture. As you can see, even this demand has broken the previous resistance. But we are not gonna initialize our trade when the market retests this demand zone because the origin for the formation of this demand was done here. So I will be reliable when the market will be retesting this zone rather than this zone. This same applies for the sell side with the supply zone. And once the demand or the supply is being retested, it becomes weaker. And if the market comes again into this point or this zone, I will not be much reliable upon this supply or demand zone to initialize my trade. So this was the note point which has to be taken into the picture while initializing your trade. That's all for the today's session. Hope you have understood the Ved indicator and you will be using it for your trades. That's all for today. See you in the next session. Goodbye.